I have been waiting to record this video for so long. This is going to be one of my favorite videos today. What is going on, investors? Welcome to my channel. This is the Frugal Investor. I just added Alibaba to my portfolio today. And for those of you that have been watching my channel, you guys know that I'm so picky with the type of businesses that I add to my portfolio and the amount of businesses that I hold. I currently hold 22 businesses and I'm very picky with the type of business and the amount of business that I add to my portfolio. But this opportunity is just too big for me to miss. The evaluation is great, the business is great, and I just do not want to miss this opportunity. In this video, I will explain why. Please like and subscribe for great content every day. With that said, let's get right into it. Chinese stocks have been beaten down recently due to a fear of clampdown from the government and its regulation. Not only that, there is a fear of delisting from the stock exchange, there is a fear of the company's CEO getting abducted by the government, there is a fear of less transparency in the balance sheets. While all these fears are valid, there is one common word across all these lines that I just said. That is fear. Fear is the word that is common among all these scenarios. There is fear on the street regarding Chinese stocks. What do the greatest investors of our time, like Warren Buffett, Charlie Munger, Monish Pabrai, whoever you want to count, what do the greatest investors of our time tell us? Buy when there is fear on the street. When the stock's valuation are at an all-time high, that is not a good time to buy. When there is fear on the street, when people are running away, the business is good. That is the time to buy that business. And that is the fear right now surrounding Chinese stocks, Chinese businesses that are, some of them are really good businesses, but people are scared that they will be delisted, that the government will clamp down and close them. There is so much fear surrounding these, and that is where the opportunity is right now. Let's address all these fears one by one and let's talk about it. The biggest fear is government clampdown against Alibaba. Chinese tech industry, on an average, is less regulated than the tech industry here in the United States. Their tech industry is still very young and it just started, is still very young, and they haven't put most of the regulations to keep the investors, the business owners, and the people safe. In USA, they're talking about breaking up the big tech, while Chinese government is just talking about regulating it, just making it safe for everybody. I do not see anything wrong with that. Why do when we do it, it's right, but when somebody else does it, it's wrong? I do not see anything wrong with them regulating their business and making it more safer for everybody. China's policy over the past 40, 50 years is to grow business and entrepreneurship and grow and open their economy to the world, not to clamp down and close off and shut off businesses and make people jobless and hurt their economy. It's quite the opposite. They want to open business up. They want to give more opportunities to their people, more entrepreneurship opportunities to their people, more jobs to their people. They don't want to do the opposite. And that is why I think this fear is completely irrational and completely wrong. That the government is going to shut down Alibaba, government is going to clamp down on them. They're going to regulate it. They're going to make it safer for everybody. But the fear of like shutting down and closing down Alibaba is completely irrational and completely opposite to what they believe in. The other fear is the fear of the CEO getting abducted by the government. China is a country where the government controls and monitors everything. You cannot speak out against the government in that on that land. When you are in that country, you have to respect the laws and the regulations of that country. And being the CEO of one of the biggest companies in that country, you're calling the government stupid. That is the worst thing that a CEO can do. Do in Rome as the Romans do. That is the law of their land, and going against that can get you in trouble anywhere. Going against the law of any land can get you in trouble in that on that land. So that is the worst thing that the CEO can do, and that is a mistake of Jack Ma, not the government. So I think this fear is completely irrational. No CEO should break the law of any land wherever he's doing business. And he broke that law and he was straightened out by the government. So that fear is completely irrational. It is a positive thing that other companies are not allowed to do business in China. Amazon and all these other companies, they're not allowed. So it is a monopoly. Alibaba is a monopoly. They have such a huge market to win and take over. They don't have anybody to compete with. They don't have any foreign influence to come and take their market share. This is a great type of opportunity for the business, and this is a great type of opportunity, great market for this business to take over and to expand in. One of the biggest markets in the world. All of the other fears are also completely irrational and baseless and are overhyped by the media of today and by propaganda, whatever you want to call it. It's completely irrational. The reality is, China is one of the biggest markets in the world, and they are opening up their economy for more entrepreneurship for their people, for more jobs for their people, rather than closing it down and shutting it down and regulating it, over regulating it. They are very smart with what they are doing. One of the biggest markets in the world, with a monopoly, with no foreign company to compete with a lot of market share to expand and grow in, lot of foreign investors, a lot of foreign people buying stuff from their website. This is one of the most diverse and the most greatest business to buy. This is like the Amazon of the world, even bigger than Amazon. The top line has gone up by 52% year over year. 52% year over year. Name the companies in United States that are growing by 52% year over year. We can name them on our fingers. If we look at the bottom line grew from 1.3 billion to 22 billion in 2021, 1.3 billion in 2013 to 22 billion in 2021. They are growing at such a fast pace in one of the biggest markets in the world. If we look at the amount of cash that they have on hand, they have $75 billion on hand, and the debt is only $28 billion. That is, they can pay their debt three times over with the amount of cash on their hands. Give me a company in the United States that has a monopoly on one of the biggest markets in the world, that has the amount of cash that they can pay their debt three times over, and that is growing their top line by 52% year over year. Give me one company other than the banks that is doing that. There is none, guys. There is none. How can you say this business is a bad business? It is in such a solid position in one of the biggest markets in the world. This is one of the greatest business opportunities in this market today. Okay, people from all over the world are doing transactions on their website. This is one of the greatest opportunities of our times. The P by E ratio for Alibaba as of today is 21.30. 21.30. Amazon of China, and it's trading at a P by E ratio of 21.30. If we look at their forward P by E ratio is 15.16. That is amazing. Price over earnings ratio so low for a business like this. All the great investors of our time, Charlie Munger, Monish Babra, are buying this business hand over fist. Okay, Charlie Munger has been holding this position for a very long time. Charlie Munger is a long-term investor, and his company Daily Journal owns about 165,320 shares of Alibaba. The holding makes up about 19% of its portfolio, which equals to about 197 million. Not only that, he is saying that Jack Ma was very arrogant to be telling the Chinese government how dumb they were and how stupid their policies were and so forth. Munger said, considering their system, that is not what he should have been doing. So he is pointing out that how stupid Jack Ma was for criticizing the Chinese government. Currently, the analysts are predicting a strong buy on Alibaba, and the price target they're targeting is $272.82 with a high estimate of $336. Currently, the stock is trading at $167, and they are predicting it to be at least $272 in 12 months and $336 to be the high estimate. There is a huge upside for this stock to be winning in the long term. And I can understand why Charlie Munger has been holding this position and why he is so bullish. Everybody is rating, all the analysts are rating it a strong buy. Monish Babrai thinks this business is a three bagger for him. Okay, these are one of the greatest and the smartest fish in the water. Okay, and they are buying this business. So I do not see any reason why this business is a bad business. All this media, all this news and hype, sometimes you have to skip through all this bullshit and go to the end of the thing and see what's right and what's wrong. And when you analyze it, you will find that there are great opportunities in the market. And Alibaba is one of them. A great business in one of the biggest markets in the world, trading at such a great P by E ratio, okay, with a monopoly that nobody can compete against it. So much cash on hand, so well managed, with so much less debt, okay, with transactions, people from all over the world doing transactions on their website. I do not see anything wrong with buying a great business at such a cheap price. It has been beaten down, and this is a great opportunity to enter. So I'm building up my position in Alibaba right now. Currently, my entry point is 171.70. I just bought $1,400 worth of Alibaba, and I will be adding more to this position. And eventually, I want to make this one of my biggest positions. If the stock price gets more down, I will be buying more. This is one of the greatest opportunities of our time. Everything is so hyped up and so high. Prices are so high for all the businesses, and this is one of the best businesses to buy in the market today. This is the Frugal Investor. This was my analysis of Alibaba and why I'm buying this business. If you like this type of content, leave me a like and subscribe to the channel. Thank you for watching. This is the Frugal Investor signing out.